Hi, everybody. Okay, so this is our reliable answering service exercise. It is going to walk us through making adjusting journal entries and posting them to the T accounts, making an adjusted trial balance to make sure that we're in balance, and then preparing the financial statements. So, first off, we have a trial balance. This is before we make our adjustments. So some could write this as, and I prefer it to be seen as, unadjusted trial balance. But in general, you'll just see it called trial balance. But you know that if you haven't made your adjustments, it is the unadjusted trial balance. Okay, so let's see what we have. We've got some assets, liabilities, capital, withdrawals, revenues, and expenses, and we're in balance. So we're going to use these as needed to prepare our adjusting journal entries. Our adjusting journal entries are given in A through F. All right, so it says required. Determine the necessary adjusting entries and record them in the general journal. All right, insurance that expired during December amounted to $40. So let's just look up here and see. We had prepaid insurance of $240, and now they are telling me that some of it has expired. $40 has expired. Our journal entry is always for the amount that has expired. So let's go make that journal entry. Letter A is going to be insurance expense, because we put it to the expense once it's been used up, $40, and we need to take it out of the asset because part of it's been used up. I'm going to go ahead and post it to the T account so that you can see what this looks like as we go. So insurance expense just now got debited for $40. So we added $40 there for letter A. And we just reduced our prepaid insurance. It used to be worth $240, but we just reduced it by $40. So now we only have $200 left in it. So that seems to make sense. Letter B says office supplies on hand on December 31st totaled $75. Notice that this one is giving us the balance. They didn't tell me how much I used up. They're telling me how much I now have on hand. So I need to look and see. My books say I have on hand 180, but I just found out that I actually only have 75. So to get from 180 down to 75 means I must have used up $105. I got that by subtracting because I had 180, but now I just now realized I shouldn't have that much in there anymore. I should only have 75. So I need to reduce this number by 105 to get it down to 75. All right, so the journal entry looks like this. I've used up 105, so I need to debit supplies expense for 105 and credit supplies, the asset, for 105. So let's go see what that's going to do when we post it to our T accounts. So we're going to post supplies expense, office supplies expense of 105. And we're going to credit office supplies for 105. And notice that when I do that, I have 180 minus 105, and that gets me down to my new value that I wanted of 75. All right, let's look at letter C. Letter C says depreciation for December totaled $100. So we know that whenever we have depreciation, we're always going to debit depreciation expense and credit accumulated depreciation. It does the same thing as if we were to debit depreciation expense and credit equipment, except for we don't credit equipment. We never credit equipment. We leave it in the value or at the value of its original cost. Instead, we reduce its value through this contra asset account called accumulated depreciation. All right, so they told us that it was for $100. So we're going to debit depreciation expense and credit accumulated depreciation. All right, so we're going to post that. Depreciation expense, office equipment. Sorry, my dog's barking. Accumulated depreciation. All right, so these two accounts will always be looked at together. If you want to know the book value, you look at your balance in your office equipment and you subtract out the balance here. You can see that it's a contra account because office equipment has a normal debit balance and this has the opposite, so a normal credit balance. All right, I've posted depreciation, so let's go on to letter D. So letter D says accrued wages on December 31st. So we like accruals because it means either a receivable or a payable. Since wages are an expense, we're talking about a payable. So letter D, I need to make sure it's wage. Yeah, wage expense. And it tells you how much to accrue for, $120. So wage expense, $120. And wage payable, $120. That accrued wages because my employees have worked, but I haven't paid them. And I'm making this adjustment because I need to show that they've worked and that I owe them on my financial statements. Let's go post letter D. Wage expense, wages payable, $120. All right. D, $120 for wage expense. D, wages payable goes up by $120. All right, letter E says revenues earned for services performed in December but not billed by the end of the month total $300. So have we earned them? Yes. Have we gotten the money? No. So we're talking about accrued revenue. So we're talking about they need to pay us, so we debit accounts receivable and we credit fees earned for whatever amount they're telling us to accrue. It says that we have earned $300, but we haven't gotten paid yet. All right, so I'm going to post this, debit accounts receivable 300. Letter E, 300, accounts receivable goes up. Letter E, fees earned. Oh, I've been calling it fees earned. It is called advertising service revenue for us. I'm going to go and fix that. So that should not be fees earned because we don't have a fees earned. Our revenue account is called advertising service revenue. Make sure I haven't done that any other place. No. All right. Advertising service revenue. Yes. Okay, letter F. Revenues received in advance of services still to be performed, $300. So have we done the work? No, not yet. So we need to defer it. Where do we defer it to? Into an unearned. So we've already done that because we're in our adjusting process. So let me just remind you what that regular entry looked like before. When we deferred it, we had said we got cash. This is the step number 1. And we did unearned fees. That's what happened before and gave us this balance that we can see up here. But now they're telling me what's yet to be performed, what the balance still needs to be is 300. So look up here. Unearned revenue. Needs to be 300. But right now it's showing 460. So I need to say 460 minus 300 and realize that I must have earned $160. So I need to go and make an adjustment to show that I have now earned 160. So this is step 2 of a deferral. So let's journalize that. So we're going to debit unearned fees for 160 to reduce it. And we're going to credit answering service revenue for 160. All right, now we've got to post it. Although I realized during that one that we posted the 300 here, but I did not post advertising service revenue there. So I need to finish posting my E. So I'm going to also post E right here because otherwise I'd be out of balance. I've got debit here and a credit there. So now I can post F. All right, and so F was unearned fees of 160. Unearned fees of 160 for F, liabilities. And credit answering service of 160. All right, so now I'm finished posting. So anytime you update your ledger or your T accounts, you need to see if they are in balance, make sure that we did everything correctly. And so to do that, we're going to prepare the adjusted trial balance. So we're going to take each of these accounts and get their balances. This one only has one entry, so that is its balance. Accounts receivable is going to be $1,250 plus $300. Office supplies, a debit and a credit, so we subtract And I would encourage you to pause this and do this on your own and then just check your work to my work for the practice of it. Okay, so once you have your new balances, so this will be the balance that I'll use in my adjusted trial balance, this, and so on and so forth. These are the numbers I'm going to bring over there. And you're going to list them out and put them in as a debit or credit and make sure that you're in balance. I'm just doing this so I can quickly see them and put them over there. These are my ending balances. So just double check that you got the same numbers. All right. So then I will copy those numbers over to my adjusted trial balance. And once I do that, I will see that I am in balance. Okay, so once you're in balance, then it's time to prepare your financial statements. So I would pause this, prepare this on your own because this is what was homework for a class, and then we checked it on the board. So pause it and then come back and see if you got my answer. Okay, so here I listed my answering service revenue. Then I listed all my expenses, got a total to my expenses, and then said revenues minus expenses equal net income. Remember, all this is coming from our adjusted trial balance. First statement of owner's equity, we started off with the capital from our trial balance, added net income, which came right from here, subtracted out withdrawals, and got to ending capital. For my balance sheet, I listed all my assets, including the contra asset, which is just a subtraction to get to my total assets. Then I listed all my liabilities from right up above, got my total liabilities, and then got owner's equity. It's very important to remember that owner's equity came right from the statement of owner's equity, flowed right to right there. So it's ending capital. And then I checked to make sure that my total assets equaled my total liabilities and owner's equity. So that is the process. So let me know if you have any questions. Thanks.